questions we've got on the fundamental side. Gaurang Shah, VP Geojit BNP Paribas Financial Services, and on the technical side there's Kunal Bothra, Head Advisory at LKP. Gentlemen, great to have you both with us. Let's kickstart the show with our first query for the day. This one being sent in from Prashant Cheda, who's got a query on two stocks. Let's first hear him out on Treehouse Education.
I wanted to know about two stocks. One is Treehouse Education and other is Lovable Lingerie. I want to buy it for a long time horizon for about 3 to 5 years. Should I buy it?
Okay, so two names from the broader markets that he's picked out, a Treehouse as well as Lovable Lingerie. Let's tackle them one by one and focus in on a Treehouse first. It's in the education space and most specifically it's catering to the preschool segment in a way. The company is also introducing newer segments of schools, etc. They're looking at post-school activity. They're really diversifying in terms of their opportunities and their offerings to customers. And it's been a fabulous year as well so far for Treehouse. Gaurang, in terms of a good buying level, do you think it's still looking attractive at these levels, given that just in the last quarter alone it's run up close to 50-odd%? And is there money to be made from these levels?
Well, I would say avoid, honestly, post that run up. And the problem is that in this preschool education or a little bit higher end education, you have a lot of competition from the unorganized sector, unlisted entities, that is. So given the run up and given the time horizon of 3 to 5 years, my understanding is that he would be better buying into one of the large private sector banks like Axis Bank, which has gone, I think, split right now, trading at close to about 410. On a 1 year time horizon, I would say you can look for a target of about 525. He's got a 3 to 5 year time horizon. If interest rates are going to go down and the economy revival is there, Capex corporate India definitely picks up, loan growth book will be there. So I would say that, it is better to be with large cap boys, private sector banks like Axis Bank. And if economic revival is what I'm talking about, then banking and finance is the backbone of any economical revival. So I would say he is a better choice, making better returns in Axis Bank rather than a Treehouse Education.
Okay, Prashant, that's the call coming in on Treehouse. There are much more stronger quality marquee names and sectors that you can even look at. So instead of a Treehouse, it's preferable to put your money into an Axis Bank for a target of 525. What would the interest rate scenario likely to improve? That's the call that Gaurang has. But Kunal, let's get in your views here. Do you think that Treehouse, after having run up so smartly, is a good time to buy, or are there better options out there?
Well, it's difficult, I want to anticipate this because, the chart history or the price history for the stock is just around 2 odd years, and, to predict for the next 3 to 5 years is extremely difficult for a limited horizon. But, looking at the very short term perspective, I think looking at the kind of movement over the last quarter and, over the last 6 months, from 200 to 300 odd range, the stock had been trading for the last 1.5 year. It's managed to break that range, come up with, fair enough, decent volumes, not extremely high volumes. But, my sense is I think from a 6 months to 12 month horizon, I would probably place a target of close to 550 to 600. But if the investor is looking at 3 to 5 years, I think there are much more better quality stocks available from the mid cap space as well as from the frontline space. But restricting to Treehouse, I think the 6 months time horizon target would be close to 550 for me.
So Prashant, both Kunal as well as Gaurang agreed upon one point really is that you can find much better quality names in case you're looking at making fresh investments. But in case you want to stick with the Treehouse, then Kunal is seeing targets of probably up to 600 in the next 6 to 12 months. But Gaurang saying it's better idea to probably look at something like an Axis Bank instead. Well, away from a Treehouse, the second question really that Prashant had for us was on a Lovable Lingerie. The stock hasn't really been up to a whole lot this week, but nevertheless it's been one of the outperformers, especially if you look at the textile / consumption space. The segment that they cater to, Gaurang, is clearly a growing segment in terms of the sheer numbers, the price points as well. Is something that people are moving up the value chain in a way. Do you think that a Lovable Lingerie is looking attractive on a valuation basis purely from a fundamental point of view?
I think it is looking attractive, no doubt about it, Megha, but the only problem is the current level of valuation. I would advise a buy over here, but maybe a buy on a dip you get a bad day like we've seen in the last about 4 or 5 days, take opportunity and advantage of that particular down day and go and buy into it. It's a very niche name in the lingerie segment, and there are not many players in this particular segment. And given the fact that they have a diversified product profile right from entry level to mid-size and to high-end products, they are likely possibly to tie up. That's what I've heard. Nothing confirmed over here, with an overseas big brand name, which would again create an unlock value over here. So my advice is that he has identified a good stock. Don't be in a hurry to make money out of this particular stock. You need to be patient. I believe again he's speaking about 3 to 5 years over here. I would advise a buy on lovable lingeries, but possibly on a dip.
Okay, that's the advice coming in on the fundamentals. I think the key here, Prashant, that Gaurang is advising is that you need to have a little bit of patience. It is a good time to buy into the counter, but given that it's a niche player within the consumption space, you saw the 1-year returns, it's been about 40%. Things will take a little bit of time here. 465, that's the target that he's pegging. Kunal, let's get in your views on the charts, and do you think that it's a right level to enter into a lovable, and or do you think he should wait for a bit of a further dip?
Well, I think the stock is a very high beta stock, and I think if you look at the last 6 odd months of performance, I think if you look at the monthly performance itself, generally there have been months where intra-month there have been corrections of more than 5 to 10% from the highs of the month. So that goes to show the kind of intensity the stock probably faces during the month. So I think if the investor is looking at a time horizon, I think it's much more better or prudent to start buying this in phases. So I think the current price is just above 400 odd, and I believe the first tranche could be bought at 400. The second could be probably given a correction of 5 to 6% if it happens over the next couple of weeks. I think that could be a second entry point for lovable. The time horizon, as I think it was the case for the previous stock as well, is restricted for forecasting because of the kind of price history which I have. So I would probably place a 6 months to 12 months target on lovable at close to 480 to 500.
A query has come in from Mohit Bhardwaj, who's 34 years of age. Well, he's got about 13 stocks in his portfolio in which he has a long-term view. So let's get you familiar with the stocks that are in his portfolio. He's got an Ashok Leyland, about 400 shares of that, which he picked up at 21. There's also 30 shares of Bharti Airtel at 293. He's also got 100 shares of metals heavyweight Hindalco at 140. And from the financial space, then he's got about 50 shares at a price of 119. JP Associates, then, that's been fetched at 73, about 100 shares. There's also JSPL, that's been picked up at 337, about 40 shares. And from the housing finance segment, then there's LIC Housing Finance, about 50 shares picked up at 231. And there's NMDC, that's at 280 rupees. He's got 125 shares. There's also State Bank of India that he got at 2,269, just about 8 shares at that. And for Cesar Sterlite, well, he's making some good money on this also. That's been picked up at 214, about 91 shares. And from the Tata Group, there are quite a few names that he's got. So there's Tata Motors. There's about 50 shares of Tata Motors at 182. There's also about 20 shares of Tata Steel at 401. And then there's 40 shares of Titan picked up at a price of 226. So, Gaurang, on the face of it, it looks like a well-diversified portfolio. A lot of names have been picked up at some very attractive prices as well. What do you think you'd say is the one point that's missing? Possibly he could have had some more of the banking segment?
Yes, I would reckon exactly with that, and you're bang on point over there. One more thing that I can possibly highlight over here, that the portfolio is more concentrated or focused on the metals or metals related sectors. And over there again, there are some stocks which will possibly have a negative impact on the outcome of Colgate Supreme Court judgment, which I believe possibly by maybe 2nd or 3rd week of October, you will have a clarity over there. So I would say there are metal stocks in the portfolio. Some of them he really needs to possibly get out ASAP and concentrate on one particular stock in the metal spec, that is Tata Steel, again, which we are positive on. So some churning is definitely required. But overall, a good diversified portfolio. Focus from metal should be shifted.
Okay, so we'll work on that as we go through the individual names, Mohit. But for now, let's nail it down to the first 3 stocks. That's Ashok Leyland, fairly promising. Bharti Airtel, one of the strong players in the telecom basket. But then there's Hindalco. So let's have Gaurang, you run us through your views here.
Yeah, so Ashok Leyland again, a turnaround CV story, that is commercial vehicle, uptake numbers could get better from here on with economical revival, logistic support back end, and of course launches in LCV and HCV segment along with multi-XL segment. Little bit of uncertainty which was there on the stock is slow and steadily going away. The fact that he's holding Ashok Leyland at 21 rupees and currently I think the stock is somewhere close to about 40-41. I don't think that you should worry about. Hold on to it for a target of 48. Bharti Airtel, again, a positive coverage from our side as a disclosure. 445 is the target. I think voice and broadband contribution coming in, and of course voice contribution coming in, there should be a decent upside from here on. The only hangover would be in 2015. I think most of the licenses or spectrum usage which is underway is up for renewal. So there again a little bit of concern, but nothing negative over here. So hold on to Bharti Airtel for a target of 445. Hindalco, here is where I have a problem. This particular stock in the metals pack has been rather a sideways to an underperformer, and excuse me, and again is related somewhere with the Colgate issue and of course the verdict thereafter. I would say he already has Tata Steel in his portfolio, but the number of shares is very, very small. I would say get out of Hindalco and buy some more of Tata Steel so that you can have a better quantity. As a target 1 year, I think you can keep a target of about 665 on Tata Steel.
Okay, so there's only one change in the first three stocks that you have, Mohit. So switch from a Hindalco to a Tata Steel instead. Gaurang, let's get your opinion on an IDFC. It's in the midst of setting up those banking operations at JP Associates. A terrible week for the stock in a way. We saw it plunging to the lowest levels that we've had since 2005, I think. And also there's JSPL. What do you make of this?
Well, IDFC, yes, you are right. Banking operations could possibly re-rate this stock and we could possibly have higher targets coming in. And my understanding is in the next 6 to 8 months, if these banking operations are rolled out, then it will only augur positive side for the stock. On the, core business side, with the current government policy, I think a lot of focus is going to be there on infrastructure and financing of infrastructure projects. That's where IDFC will possibly stand tall and strong. And added with the banking operation rollout, I think 1 year target, what we have set aside is 225, so you can hold on to IDFC. JP Associates, I have always been an advisor that you should avoid this particular stock, and we have seen that, the stock has actually gone in a tailspin in the recent time and has been underperforming the market to a great extent. Sell out JP Associates and you can buy into a smaller private sector bank called DCB, I think trading at about 85 or 86. With a 1 year time horizon, you can keep a target of 98. GSPL, again, a stock related with the metals pack, on which we have got grave concerns with the issues that I have just highlighted a while back. Sell out GSPL, buy into Crompton Greaves, your target should be about 245. This is a very conservative target. If the company does well in terms of quarter-on-quarter numbers, you could possibly revise it upwards.
Okay, that's the word coming in on the next set of stocks. So let's focus in then on an LIC Housing Finance. What's the call here? And of course, metals reflects in every set. So there's NMDC this time. And from the PSU banking lot, SBI has been fetched at a buy point of 2269. Your verdict?
LIC Housing hold comes from a good pedigree. Interest rates cuts coming in from maybe first calendar quarter 2015, Jan, Feb, March. If things go well, I think that interest cuts could only get better from here on. That's, of course, very positive for LIC Housing. Uptake in real estate efforts by the government to bring in REITs, I think that should augur well for offtake of housing loans. Loan book should definitely grow in a better shape. Asset quality, par excellence for LIC Housing. Hold on to LIC Housing for a target of 435. NMDC, again, a concern over here, like I highlighted. Sell, buy a Tata Global Beverages for a target of about 220. SBI hold, very decent level to get into it. SBI, you will keep a target about 2785, 2765 from a 1 year time horizon.
Right. Okay. So that's about LIC, Tata Global as well as SBI. Let's talk about then the next set of stocks. There's Sesa Sterlite that's been picked up at 214. There's also Tata Motors at 182. So he's making fabulous money on that. And, we've also had Moody's come out with the ratings outlook on the entire Tata Group bunch. And they seem to be quite optimistic about what the future really holds for the longer term here.
Yes, I guess, as things improve at, ground level, both in terms of micros and macros, for India data points, I think you will have better ratings coming in for a lot of corporates as well as the sovereign rating of India. Of course, it will take a while, but there are still hopes over there. So, firstly on Sterlite, my verdict is that sell it off. You're possibly making some, small profits or gains, whatever be it. He's missing one particular sector in his entire portfolio, that is IT. I would recommend a mid-cap IT name, Tech Mahindra. Very recently, we have upgraded our targets to 2,700, 2,800 on Tech Mahindra. So he can definitely buy a Tech Mahindra over here compared to a Sterlite. On Tata Motors, again a disclosure, we are extremely positive. Our target is about 585 1-year time horizon. Domestic corporations are a little bit of slack, but they are launching numerous models. They've already launched Zest. I think in the next couple of months you will see a hatchback named Bolt coming in, a new SUV variant and an upgrade of Safari should augur well. They put in together a contribution from JLR. I think if things, really work out with both this equation, I think there is much more higher level for Tata Motors. So hold on to it for a target of 585 on Tata Motors.
Okay, some tweaks and changes, but by and large, Tata Motors is the stock that you should stay with. Fundamentally, things seem fairly strong and sound, and 580